We have a lot to cover today, but before we do, JP Morgan has teams to support you at every stage of your growth. As former founders who have worked in local markets themselves, the bankers at JP Morgan bring deep sector knowledge and lived experience to their clients. JP Morgan can help you navigate complexity with confidence, backed by real-world insights and an entrepreneurial perspective. Get what your startup needs now at jpmorgan.com/grow-without-limits. JP Morgan is the bank of the innovation economy. And welcome to the Tearsheet Podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tearsheet Editor-in-Chief, Zack Miller. And for fintechs, cracking the credit union market is notoriously difficult. It's relationship-based, insular, and requires a fundamentally different approach than banking. Many try and fail, but when done right, it opens up distribution to institutions serving over 140 million Americans. Today, I'm joined by Brian Kaas, President and Managing Director of TruStage Ventures, the corporate VC arm of TruStage, a $5.5 billion annual revenue insurer that works with 92% of credit unions nationwide. And since 2016, TruStage Ventures has deployed $400 million across 50 plus portfolio companies and facilitated over 3,000 partnerships between credit unions and fintechs. We first spoke with Brian in 2021. It's hard to believe it's been that long, when the fund was just gaining traction. And 4 years later, the portfolio has matured with companies like Ethos, Current, and Smart Asset. And Brian's team has become essentially connective tissue between innovative fintechs and credit union distribution. We'll dig into what makes credit union partnerships different, why so many fintechs struggle to break in, and why stablecoin solutions may have become the number one request Brian's hearing from credit union CEOs. Brian, welcome back to the show.
Zach, great to be here with you today.
So 4 years, it's been a long time. So you've been in this game on this side of the fight for 8 years now. Curious what's changed most dramatically. You've seen different sides of the market. I mean, wow, we've had a roller coaster, and you've seen how fintechs have approached credit unions during this time. Like, are they still making the same mistakes? What have they learned? What's happened?
Yeah, certainly have a few battle scars to show since we last spoke. It has been kind of a wild ride, just in the kind of the venture capital world. Fortunately, the discussions are much different as we head into 2026 versus kind of getting through, kind of the darkest days when SVB and other liquidity issues challenge the market. I think what we're seeing on the positive side in the credit union space is now more than ever, there's really greater interest by credit union leaders of thinking creatively around ways to partner with fintech companies. So I think, we've been in this space really connecting credit unions and fintechs for almost a decade. And we've gone from skepticism at the very early days to curiosity to now I'm almost saying more necessity, where credit unions realize, hey, the technology is moving so quickly. Customer needs and member needs are evolving very rapidly. We need to partner with these fintech companies to make sure that we stay relative and competitive into the future.
So they don't necessarily, and I think there was one stage in there, at least from a journalistic point of view that we covered, where they felt there was some level of competition. I think early stage fintechs may have been trying to, but they've learned how to partner and go B2B to C or B2B, whatever it may be. So are the credit unions there's an openness, and you said a willingness and more than curiosity that they're partnering. Do they sense that it's at an essential point of their maturity to be able to better partner with fintechs so that they can be competitive in the future?
Yeah, I think so. I mean, I think, what makes a good partnership really, it's a two-way street, in that you have to have, fintech companies that listen to the credit unions. What are their needs? What are maybe some of the distinctions between banks and credit unions? And then, on the side of the credit union, it's how do I work with an earlier stage fintech company? We spend a lot of time with credit unions, helping to kind of educate them on the space, educating founders on how to work with credit unions. trying to kind of level set around, kind of expectations. And, I think there is a maturity curve, and what we see with credit unions that really run kind of the front end of fintech partnering now have a pretty well-oiled machine, and we have others. Credit unions a broad spectrum. Others that are just on the early days of that journey. So a lot of lessons to be learned by those. But like I say, I think it's becoming increasingly more apparent to credit unions that the fintech partnerships are really going to be critical to just the long-term success of the industry.
So when a company comes to you, you've invested in it and you're looking to get it distribution, make partnerships with credit unions. Where do some of the companies stumble? Like, what are some of the common hurdles that they may not clear?
Yeah, I think for companies, in our portfolio, and sometimes, we certainly talk to many, many more companies that are trying to enter the credit union space. Again, I think where sometimes they may stumble and fail is one, over promising and under delivering. I mean, one of the things I think that founders they're always afraid to say, either no or yeah, we don't have that capability. And in what is really frustrating for the credit union leaders is that, you said you could do X, but you really can't. And sort of it breaks the trust between the partnership right out of the gates. And I feel like then you're trying to salvage and rebuild trust, which can take a long time. And that's like one of the biggest areas where I see early stage companies stumble. I think, not being responsive is another area where fintech companies can really kind of stumble. And within the credit union space, it's a very collaborative environment. We'll go to credit union events, and you'll have a panel of credit union CEOs all giving each other kind of best practices of like, oh, I had this trouble. Well, yeah, you should do this, and you just don't see that in other industries where Microsoft and Google getting together and sharing ideas on how to improve their businesses. It's great for companies that really do a good job of creating that trust and goodwill with credit unions, because they talk and they become your biggest advocates. And that's been a key to success. The flip side is if you stumble out of the gates, again, kind of fail to deliver what you said you could, that also spreads, and it can kind of taint a company's reputation and make it very difficult for those companies to succeed in the credit union space.
Is that a challenge? I have to imagine is for some startups that are very technology driven. Like, it sounds like these partnerships are hands on. It's relationship building. Is that a differentiable skill set, I guess, on the technology side?
Yeah, I mean, I think it really is. I mean, again, I look at a couple of companies that we invested in. They had one or two credit union partners, and they it sounds cliche, but they listened. Like, they went in there, spent time with those credit union leaders, really understood what the pain points were and kind of where credit unions found value. They, would adjust and modify their product based on that feedback. And that one, it created that level of trust and goodwill. But I think, more importantly, you sometimes will have founders that develop products in a vacuum, and where you're kind of going through this co-development with live customers, I think can build a much better product. And so that's been another key to success that we've seen within our portfolio.
I know when you look at venture economics, like there's a certain percentage of companies that get invested in that, investors assume will go bust. It's just high risk, high return. And I know for your discovery fund, you quote a 95% survival rate for early stage startups 4 years in. That seems to be a remarkable data point for me. Like, what are you seeing that other VCs are missing, or does that have a lot to do with the support that you provide post investment?
Yeah. One, kudos to Elizabeth McCluskey, who's on my team. She leads the Discovery Fund. She has, really an incredible talent of finding founders that, really are addressing needs of consumers, especially around financial inclusion. And many of the companies in the Discovery Fund, really are looking to address the underbanked segments of our population, and so I think that's been very key. The founders are very very ambitious to the end of, like, sometimes they just have incredible, like, fight, if you will, more so than we see sometimes across other companies. And I think we really guide them of, like, hey, let's stretch that dollar. Let's make sure we're really smart about the investments. We do provide follow-on investments with these companies, so that's helped them kind of incubate these ideas. Many of these companies are pre-seed and seed stage at the later side for this fund. But I think also we help get those early stage companies with credit unions, help them kind of build some of those first customers, kind of providing opportunities to promote them across the credit union system. And that can be really challenging. Like, how do you get those first couple of customers? How do you kind of get sort of endorsements to land your next 15? It's getting to kind of, 20 customers that can be the longest haul for early stage companies. And that's been a big area where, Elizabeth and our team have helped those companies, kind of get to that next level and become a fundable company for a Series A round.
So I'm curious, I guess, about the investable themes that you're seeing right now. What, as a firm, what are you looking at? What's interesting to you?
Yeah, I mean, we are a strategic fund, and we really are interested in a wide range of companies that can address the needs and technology gaps of credit unions that have products that really will help that middle to lower middle market succeed financially. And TruStage also offers a broad range of financial products. So are these companies potential channels for us to offer our products? And so we have invested a lot around lending technology and financial wellness solutions that credit unions can deploy to help better engage with their members or attract younger members. So again, that can take many different flavors. I think it's been really interesting just with some of the latest advancements in AI, how that has kind of launched a new wave of fintech companies. And we're also kind of very closely tracking and getting involved around stablecoin and what are some of the implications to the whole payment infrastructure that could emerge with passage of the Genius Act and activity around stablecoin.
I do want to ask more about stablecoins, but before we do, maybe just double click on your answer. What do you do, Brian, to stay fresh on what credit unions are looking for to serve those gaps? Like, what's the form factor for that? What does that look like?
Yeah. I mean, we have really kind of the benefit of because of the number of credit unions that TruStage reaches. There isn't a week that goes by where either me or someone on my team isn't having a one-on-one dialogue with the C-suite of a credit union. We invite credit unions to our campus headquarters, and our team will spend an hour. Hey, what are your pain points? What are you focusing on for next year? What is your strategy, and how can fintechs kind of play into that? So we get just a lot of feedback through that channel. And just we also will present at a lot of credit union conferences. A lot of times we'll bring portfolio companies to join us on panel discussions, and again creates incredible opportunities to really understand what credit unions are looking for through kind of the platform that we fortunately have to invest through.
That's awesome. And I kid you not, I think for the past 18 months on this program, we have not had a discussion that didn't include generative AI. That was probably that certainly in 2025, that was the most popular topic, but stablecoins have become a very popular topic too, as of late. I'm curious we have covered that at Tearsheet both from a consumer point of view and from a traditional financial institution point of view, like the large banks. I'm curious with credit unions and where they see the potential and what role they can play in the whole stablecoins rollout.
Yeah, it's been really interesting to see the level of interest and attention that stablecoin has generated since really August. Coming out of passage of the Genius Act, more so than even agentic AI or any other topic or area of fintech over the last decade. I think it's really probably a combination of a couple things. One, it's an area that many credit union executives really had almost no knowledge of. So there's, again, kind of an educational understanding of what is stablecoin, and as importantly, what is the impact on the credit union industry? When they kind of learn about that, I think the next biggest concern shifts more to concern about the potential for deposit outflows and the impact on different revenue streams that credit unions have. And, kind of the lifeblood of credit unions, it's, their ability to provide loans. And they're not for profit organizations, so they don't have big profit margins to rely on. So if you start to take away a couple of revenue streams and decrease lending, they become very concerned. We've been leading a joint effort, a working group for stablecoin. I co-lead one of the work streams of that working group. Yeah, I think within TruStage, we're really looking at, because we touch almost 93% of the credit unions out there, what are some industry-wide solutions that we could potentially bring to market? My concern is that the industry becomes very fragmented when it comes to stablecoin, and any of the solutions, because we are fragmented, unsucceed, and therefore we become kind of beholden to either kind of big crypto or big banks in terms of having partners that aren't necessarily going to have the best interests of the credit unions in mind. And so that's really where I'm spending the majority of my time over the last several weeks is really advancing some solutions in that space.
How would you describe the maturity level? Obviously there's a wide range of credit unions. But like you said, some are just learning. What about the other end of the spectrum? For the ones that are more advanced, are they actively building? Have they made investments? They have products in market? Where are we? It sounds really like we're still very early, right?
I would say the vast majority of the credit union industry is still very early on in the journey. I think there are a couple of credit unions. In fact, I know there's a credit union in St. Cloud, Minnesota that has or will be launching its own stablecoin. That's probably kind of on the other end of the spectrum. Some credit unions experimenting in a digital asset lab that has emerged. I would say there's definite interest and I think a recognition by credit unions that, hey, we need to really stay on top of this issue. That's my advice to those credit unions. And we can't, wait around and start to think about this topic in 2 or 3 years down the road, because I think nobody knows how quickly things will evolve. It's possible this evolves slower than maybe some think, but I just don't want the industry to become flat-footed, because my concern is if there's an outflow of deposits, those deposits potentially are kind of gone for good. And that really will hamper the ability of credit unions to do what they do so well.
Is there a nuance there on the credit union side of like, are you also looking at tokenized deposits or just stable coins, or is everything's like up in the air right now?
Yeah, I would say, also that's part of the discussion. Mm-hmm. Can we tokenize aspects of the balance sheet? Where are some of the use cases around that? Is there an opportunity because of that collaborative nature that I spoke about with credit unions to really kind of anchor around a single solution? So could there be, really a credit union stable coin where you can create that network effect because of that collaboration? And so is there, maybe a way to take a thread and turn it into maybe a competitive advantage? And how do we do that? And again, just given that we touch more credit unions than any organization out there, what role can we play within TruStage and our ventures team to kind of bring those solutions to market?
I'm curious about the two hats that you wear. Obviously, you represent TruStage, and you have a profit motive yourself, and you're also helping credit unions be competitive with banks. Like, is there a tension there between those two different roles?
Yeah, I don't think that one is exclusive to the other. I mean, I think you can help credit unions through this, kind of technology transformation that we're going through by, making them more relevant to grow their membership, which can translate into growth in our portfolio companies, which translates into financial returns for us. And I think importantly along the way, helping that end consumer. Like many of the companies we have, have built products and solutions to help people have a better financial future. And so I think there's a way where you can kind of check all the boxes where one doesn't come at the expense of the other.
Makes sense. I have one last question for you as we get to the end of our conversation today, Brian. What are your biggest goals for 2026? Could be personal, professional. Like, how are you making sense of the upcoming year?
Yeah, I guess I'm bullish in terms of I think there could be a lot of M&A activity that finally starts to unlock. I'm excited about what we could do around stablecoin and seeing what opportunities lie there. So we'll be focused on that, and I feel like kind of a resurgence of new investment opportunities. Probably if you had asked me a year or two ago, we kind of had seen and heard about companies. I mean, there's almost not a area of financial services where there aren't 10 fintech companies stacked up trying to solve certain problems.
Does the world need another PFM, right? Yeah.
Right. Yeah. Exactly. And so, and I just feel, with some of the things that we're doing around, the AI and stablecoin creates new investment opportunities. And we're going to double down on work we're doing to increase the number of partnerships between credit unions and our portfolio company. So that's going to be a big area of focus for us because, we really kind of fail on our mission of bringing innovation into the credit union space if we're not helping to create those actual relationships between the credit unions and fintechs.
Brian, it's been great catching up with you again, and welcome and thanks for joining us on the Tearsheet Podcast.
Thank you so much, Zack.